Hello everyone, my name is Blaine Pearson and I am a graduate instructor in Texas Tech's Personal Financial Planning program. In this video, we're going to review advisor compensation. One of the most common questions I receive from incoming students into financial planning is, how do financial advisors get paid? And in this video, we're going to take a look at the different levels of how someone in financial services would get paid, and we're also going to look at the individual types. So to begin, we have the firm level. Now, the firm level means we own the firm, or we are a part owner in a firm, and from there are several ways we can get paid. The first is commission, and commission only. So basically you have a set of products, or you have a mutual fund or something to that effect that you sell to your clients, and the amount you sell, you get a certain percentage of that in the form of payment for your selling it, and that is the base form of commission. There's also fee only. Now, fee only is a term that a lot of financial advisors like to throw around, and a lot of individuals in the industry like to throw around without really understanding what fee only actually means. So fee only, let's first look at the examples. It can include something like an AUM model. So AUM stands for assets under management. So based on the amount of assets that the advisor is advising on, they get a certain percentage of that. Usually it's 75 basis points, 1%, 125 basis points. And it usually depends on the amount of assets that the advisor has, and the amount of service that the advisor is doing on those assets. Now, these are assets that do not include things like a house, a car, something like that the advisor may actually give advice on. This actually is the assets that physically the advisor can make changes to. So things like your IRA, your taxable account, trust accounts, those kinds of things. Now, what a retainer fee is where you basically have a financial advisor that you can have kind of on your board, much like a lawyer situation, and the retainer fees with that. Hourly, so bill by the hour, bill by every quarter of the hour, and subscription fees. This is another fairly new form of compensation for financial advisors. So much like a gym membership or a Netflix subscription or something to that effect, you pay a subscription fee and get access to the advisor's knowledge and releases, etc. Now, there's fee-based, which include commission and fees, so any of these fee-only types. And lastly, there's fee offset. And one thing that I want to take a briefly mention is that fee-based means commission and fees, whereas fee only, there are no commissions involved. So when someone says they are a fee only practice, that means they are not taking commissions. So if they are selling annuities or something like that and hold themselves out as fee only, that is not a correct definition of what their practice is. So let's look at the employee level. So the employee level is going to encompass really just two basic forms of compensation. So we have the firm level, right, where we have the owners of the firm, the owners of the practice, etc., and they hire paraplanners, operations officers, compliance officers, etc., to handle the employee level. And the employee level usually includes a base salary and some kind of bonus. Now, the bonus may or may not be tied to production, and what I mean by production is the amount of assets that the firm has grown by, or the amount of revenue that the firm has increased, but usually it is a salary and then some type of bonus structure. And there's also commission based for employee level too, if you're in like an insurance situation. So again, the firm level and the employee level, and the most common ways that advisors get paid. Again, this is Blaine Pearson, and in this video we covered advisor compensation. Thank you for watching.